The block of flats buildings insurance market will see the most significant change in legislation with effect from the 12th of August 2016 with the introduction of the Insurance Act. This piece of legislation replaces the Marine Insurance Act of 1906, and you may be wondering, why do we still have such an out-of-date piece of legislation relating to boats? Like many of the principles of insurance, this relates back to the early days of insurance, in the days when traders would send their boats around the world to collect valuable cargoes such as spices and tobacco. And because sea travel was so perilous, quite often these boats would be lost at sea. To cope with this and provide a risk transfer mechanism, traders met together in the coffee houses in Lloyd's of London, and they formed the basis of insurance as we know together, sharing the risk every time a boat was lost by all contributing to a common pool. And a lot of the legislation that we still have in place relates back to these early roots of insurance. The Insurance Act is actually good news for most commercial policyholders, and blocks of flats are considered as a commercial policyholder because they are normally insured by the entity, and then you have all the lessees underneath, who are probably the beneficiaries and often pay the premium. But what the Act actually means is that the old principles of utmost good faith and of material facts, when you actually complete your proposal form, will be replaced by some new terminology called a fair representation of risk. And this is important because it places more emphasis on the insurer to ask the customer the right questions and to gather the right information and behave in a fairer way, thus redressing the power and the balance in arranging an insurance contract more in the favour of the customer. So what will this mean in reality? Well, firstly, when you look at insurance documentations, you will see reference to a fair representation of risk. But also you're likely to see the questions being asked of you change. And if you use a specialist broker, this should not be a problem. However, if you use a non-specialist broker and they're not using a generic block of flats policy to insure your buildings, you need to be really careful in terms of how you answer those questions. Whilst the Insurance Act does redress a lot of the balances, it still has the remedy of being able to avoid cover, but only now where the breach that led to the avoidance of cover is relevant to what's being claimed for. So that is a good thing because it stops a lot of the small print that was in insurance policies previously from being used against you. But in respect to blocks of flats, it's really important to still make sure that you disclose the correct building sum insured, and if in doubt, you should obtain a professional valuation, and never has this been more important since the introduction of this legislation. Finally, the Insurance Act offers insurers a new remedy if they have been misrepresented in terms of the risk. And this remedy is that they can apply a proportionate reduction of a claim based on the premium they collected and the premium that they would have collected if they'd had the correct representation of risk. And this is called proportionate reduction. So the message is quite simply, whilst the Insurance Act is a great thing and is a much better way of dealing with insurance in this century, it has never been more important to look carefully at the questions you've been asked to answer and make sure that you answer them appropriately. And if you're not sure, refer it back to your broker and insurance company. My name is Paul Robertson, Managing Director of Midway Insurance and First Shore Flats.